It wasn't a failure of military logistics. It wasn't a collapse in diplomatic leverage. It wasn't even a deficit of industrial capacity. It was a change in the plumbing, the unseen pipes of the global financial system. For nearly 80 years, the world has operated on a single operating system, the United States dollar. It is the water in which global commerce swims. But the water is changing. The emergence of China's Digital Yuan, or e-CNY, is not merely a technological upgrade. It is a geopolitical weapon. It is a new rail, a parallel system designed to bypass the choke points of Western influence. The architecture is distinct. It is not a digital version of cash in a commercial bank account. It is a direct liability of the central bank. Programmable, traceable. Absolute. This represents a return to a historical norm we have forgotten. Money has always been a tool of statecraft. The illusion of neutral money is a recent phenomenon, and it is fading. The incentive for this shift is clear. It is not about transaction speed. It is about immunity. Immunity from sanctions. Immunity from the dollar-based SWIFT network. Immunity from the oversight of the Federal Reserve. When a state feels constrained by a foreign ledger, the rational move is to build a new ledger. The arithmetic is merciless. If you control the rails, you control the destination. If you control the code, you control the velocity. The United States used the dollar as a diplomatic bludgeon in 2022, freezing sovereign reserves, disconnecting banks. The message was received in Beijing. The message was received in Moscow. The message was received in Brasilia. Reliance on the dollar is a national security risk. Therefore, the alternative must be built. It is not a question of if. It is a question of adoption curves. The precedent for this kind of monetary statecraft is established. Governments have always altered the terms of trade when survival is at stake. We have seen this movie before. The historical record is filled with moments where the state reasserts absolute control over the mechanism of value. Consider the United Kingdom in August 1914. At the outbreak of World War I, the gold standard, the bedrock of Victorian prosperity, was effectively suspended. The government issued treasury notes, fundamentally altering the nature of the pound to fund the war effort. It was a seizure of monetary authority to ensure state survival. Or look to the United States in 1933. With the banking system collapsing, President Roosevelt issued Executive Order 6102, criminalizing the possession of monetary gold by private citizens. It was a forced conversion, a reset of the rules to facilitate a devaluation. These were not market events, they were executive actions. Perhaps the most relevant precedent occurred in August 1971. The Nixon shock ended the direct convertibility of the US dollar to gold, transforming the global reserve currency from a hard asset claim into a pure fiat instrument, backed only by faith and military power. In every instance, 1914, 1933, 1971, the pattern is identical. When the prevailing system constrains the sovereign changes the system. The digital yuan is the modern iteration of this pattern. It is the technological capability to enforce capital, controls and currency sovereignty with the precision that Roosevelt or Nixon could only dream of. 2. Understand the threat. One must understand the operational mechanics. The current global system relies on correspondent banking. If a company in Shanghai wants to pay a supplier in Brazil, that money typically moves through a chain of banks, often touching New York, clearing through the US Federal Reserve System. This gives the United States visibility and veto power. The e-CNY removes these intermediaries. It utilizes a centralized ledger, where the People's Bank of China validates the transaction instantly. It is comparable to handing someone digital cash, but with strings attached. The currency is programmable. It can be set to expire. It can be restricted to specific goods. It can be geofenced. The friction of settlement disappears, but the friction of surveillance becomes absolute. We can categorize the potential impact of this shift into 3 distinct risk bands, based on current geopolitical trajectories. The low-risk band involves the digital yuan becoming a regional trade. Invoicing currency in this scenario, China uses the e-CNY to settle purchases of energy and raw materials with its immediate partners. In the RCEP bloc and the Belt and Road Initiative, This does not dethrone the dollar, but it chips away at its hegemony, reducing demand for US treasuries at the margins. The medium risk band is the emergence of a petro-yuan ecosystem. If major energy exporters like Saudi Arabia or Russia begin accepting e-CNY for significant oil volumes, the petrodollar recycling loop, which has supported US deficits since the 1970s, begins to fracture. This would structurally increase borrowing costs for the American government. The incentive for energy producers is diversification. The incentive for China is energy security without dollar exposure. The high-risk band is a genuine bifurcation of the global financial system. In this scenario, a brick-based digital currency block emerges, fully interoperable with the e-CNY, creating a closed loop for half the world's population. This would trigger a sudden, sharp devaluation of Western currencies as trillions of dollars held in overseas reserves flood back into the domestic US economy. While most economic historians view this as a long-term probability rather than an immediate certainty, the infrastructure is being laid today. There is a common counterargument that the US dollar is simply too entrenched to fail. Proponents of this view argue that the rule of law, deep capital markets, and network effects of the dollar create a moat that China cannot cross. They point to China's capital controls as a fatal flaw. Why would anyone hold a currency they cannot freely move? This argument misses the point of the innovation. The objective of the digital yuan is not to replace the dollar in a popularity contest. It is to facilitate trade without the dollar's permission. The incentive is not freedom of capital, it is freedom from American leverage. Under the constraints of a weaponized dollar system, nations will accept a restricted Chinese currency if the alternative is having their assets frozen by the US Treasury. Necessity drives adoption, not preference. We can anticipate the end game following a specific historical sequence. The first phase is controlled decline. This looks like the slow erosion of the British pound from 1914 to 1944. The dollar remains dominant, but its share of global reserves slowly ticks down from 60% to 50%, then 40%. Trade becomes fragmented. Prices in the West rise as the exorbitant privilege of printing the world's reserve currency fades. The second phase is chaotic collapse. This occurs if the transition is mishandled or accelerated by war. A historical parallel is the breakdown of the Bretton Woods system in the early 1970s, characterized by high inflation, oil shocks, and frantic diplomatic efforts to stem the bleeding. In a modern context, this would manifest as a sovereign debt crisis in the West, met with yield curve control and massive currency debasement. The final phase is reset and restructure. Just as the 1944 Bretton Woods Conference established a new order on the ruins of the old, a new digital agreement would eventually be struck. This would likely involve a basket of digital currencies, perhaps backed by a neutral reserve asset like gold. To restore trust between distrustful trading blocs, the only variable is timing and pain. Subscribe to the channel. Study the history of reserve currencies. Focus on resilience and diversification, not speculation. The ledger is changing and you must be ready.